Dear students, today I shall discuss the management decision, specifically installment versus hire purchase, and I will add one more versus hire. That's very important because installment hire purchase part is somewhat problemsome. I will discuss it later on. Now, before moving into that, let me talk about the management decision. What is a management decision? Management decision is nothing in a pure term, is a decision taken by the management. A management has to take several decisions. Some are financial, some are specific decisions. Now, so far as financial decisions are concerned, that has already been covered. That is, say, the capital structure. What will be the capital structure of the company? What will be the dividend policy of the company? Whether the company issue bonus shares or not, or the impact of the tax implication of the issuance of the bonus shares. These are the financial one. But now specific thing is a company have to take decision on the several aspects, right? This aspect, this one which I am going to discuss now, it is basically the acquisition of an asset, because you will appreciate a company main job is the acquisition of the assets. One of the main job of the management, the best way of acquisition of an asset. Now, in case of acquisition of an asset, in module 20 we discuss purchase versus lease. Here we will discuss installment versus hire purchase or hire. So now I will take the things separately. Once again, one small thing you must learn, that someone may raise a question that these things are a part of the capital budgeting, which we did in the financial management. It agreed. It's a part of definitely capital budgeting, because when you are purchasing an asset, it's a capital budgeting. But the point is, a lot of tax implications are there. When you take a decision, that is the one part is the financing part, but another part is the tax part. So some implication definitely other than the tax. So that is very, very important. We must consider those, right? So with that, I'm just moving this. And one small thing you should bear in mind, like you may say, sir, how decision can be taken? It's a very interesting one, because when you start a business, you are investing at this point, right? So instantly you are investing the money, but the return will come after a few years and return will continue over certain years. So now the question is, one may argue, sir, how do I compare? Because I am expending in 1 year, say Y1, and I am getting a return for, say, from third year, so Y3 to, say, Y10. So how can it's comparable? Absolutely right. So what we have to do, we have to use the discounting technique. We got to know the present value of the inflows. So you know the present value of the outflows and the present value of the inflows. Now you make a decision. Or if you don't know the present value of the outflows, so basically here decisions are we make decisions on the basis of the lowest present value of the cash outflow, where the cash outflow is the minimum, right? With this background, I move into the discussion. The first is the installment. So whenever you are acquiring an asset on installment, you will appreciate your immediate cash outflow is not to the extent of the cost of the assets. It will start only when you're paying the installment, right? And this is your outflow. And what are the tax benefits? You can claim depreciation on that asset you have acquired by installment. You can claim additional depreciation at the rate of 30% or at the rate of 35% as the case may be. And you can also claim 32AD, right? Subject to conditions. This is 35% in case of additional depreciation and 32AD for investment allowance. You can claim only if you are acquiring an asset for a business which is situated in a notified backward area of certain states like Andhra, Telangana, Bihar and West Bengal, right? So you can get this. And finally, the interest over unpaid purchase price, you will appreciate whenever you pay installment, you got to pay interest because you are not paying the entire amount, right? So you are paying in truncated form. So you got to pay interest on that. So that interest is also tax deductible. So once again, in a outflow is the payment of installment and inflow is the tax benefit on depreciation, additional depreciation and 32 AD, as well as interest on unpaid purchase price. So these are all your tax benefits. So you deduct it from your outflow and you get your net outflow, right? Next, I will call the hire purchase. Now, this is somewhat to me at your level a bit controversial, because what happens in case of hire purchase, the concept is the same, that outflow is instantly, it is not started, because whenever I pay the installment for the hire purchase, then my outflow starts. But what are the corresponding benefits? Because we know that benefits will be in the form of depreciation, benefits will be in the form of additional depreciation, and benefits in the form of 32 AD. Now the interesting part is, we have a circular issued by the Central Board of Direct Taxes, circular number 2/2001. It has been stated in that case that the depreciation can be enjoyed by the lessor, not by the lessee, right? Which is violating the accounting standard 19 at that time. In case of financial lease, they talk of the depreciation can be claimed by the lessee. But it talks of 2/2001 talks of that no depreciation can be claimed only by the lessor. So as a lessee, I can't get the depreciation. However, subsequently, there are some case laws. I am not quoting those case laws. It has been decided that if the following conditions are satisfied, what are the conditions? That at the end of the lease period, if the lessee fulfill all the conditions, then lessee has the right to retain the asset. Number two, if all conditions are satisfied, lessor has to give up its claim on those assets. So if these two fulfilled, then lessee can claim depreciation. So it's a somewhat controversial. So the question is, you might claim depreciation, you might not claim depreciation. It depends on those cases, right? And subsequently, if I claim depreciation, take an example, or I start with the I can't claim depreciation as per circular 2/2001. If I can't claim depreciation, I can claim tax deduction on the hire purchase price. Whatever the pay hire purchase price, I can claim the benefit on that. But if I claim depreciation, I cannot claim that. So these are the points you must bear in mind. And thirdly, if you take an asset on hire, what happens? You are paying hire charges. Say I'm giving an example that X Limited acquired an asset A1 at a hire charges of say 15,000 per month. So you are paying 15,000 into 12, 1,80,000. The entire hire charges is tax deductible, right? So you can get a tax deduction on that. Then, since it is a hire charges, you are hiring the asset, you cannot claim depreciation, additional depreciation, as well as benefit under section 32 AD, because you are not owning the assets. So once again, in a nutshell, in case of hire purchase, whenever you pay this amount of hire purchase, it is tax deductible and you can't claim depreciation. If you claim depreciation, you can't get this because you can't get double benefit. Okay. In case of hire, what happens? Your entire hire charges is tax deductible. Conversely, you can't get the benefit of depreciation, additional depreciation, as well as 32 AD. So whenever you are purchasing an asset, you must make a computation of the whole thing, that if I pay by installment, what is my present value of the net outflow, if I go for the hire purchase, if I go for the hire. So accordingly you take the decision. Okay, now you please try to grab the theory, basic theory, which will be applied while we do the case studies. Thank you.